Hello everyone, I'm Shen Yuan. I'm the founder of Joint Commonwealth Fund, or JCF. So JCF is a crypto index fund aiming to make basic income truly universal. Now for this week's JCF Weekly, we're going to talk about whether Bitcoin's prices will continue to grow or will it somehow stabilize in the long term. Now, why we have this, the reason I'm going to talk about this is because I had an interesting conversation the past week with a friend about whether, cryptocurrencies or Bitcoin in particular is worth investing. Now, his perspective is that to invest in something, he will much rather prefer to invest in stocks or real estates. The reason is that for stocks, if you hold on to stocks, the company might pay you dividends, right? And so by holding a piece of stock, you are entitled to all the future dividend payments. Similarly, for holding real estates, whether it's house or lands, you potentially can get rental payments over time. So all those, future expected payments or income, when you calculate back your, present value, that's also how schools teach us in economics, how you calculate the price of a stock. It should be all the future expected dividends discounted to its present value. The sum of that will be its reasonable stock price. All right, so that's probably a valid point of view. However, we do have some different perspectives as to whether Bitcoin is worth investing. Now, to answer this question, I actually agree with my friend's main view, but we have to understand about what influenced the price of something first. So to answer this, we all know the basic laws of supply and demand, in economies. So it's very simply, prices are determined by the market's current view on the supply and demand. So an example, if a lot of people want to buy houses in, let's say, San Francisco, but there's only so limited, a very limited supply, then what happens is the house prices will go up, right? Because there's more buyers, but there's very few things to buy. So they will try to compete with each other and raise the price. Similarly, if something nobody wants to buy it, the prices drops, right? Because the sellers will try to lower the price in order to attract buyers to buy them. So basically, based on supply and demand, that determines the price point of any product or service in the market. Now, however, what determines the supply and demand? Now, there are various ways. If it's a service or a product, potentially you could increase the supply by, doing more manufacturing or having more people to provide a service. But for some things such as, gold or other like currency, the supply is intentionally limited. Well, in the case of currency, it's intentionally limited. And in gold, it's fixed by the actual, mining capability and the supply of the mineral, that's totally on Earth. So, but on the demand side, it's usually determined by expected value in the future. So what happens is, like for example, for the price of a stock, it's usually the textbook example calculation of stock price is by if you can predict what the future dividend payments of a companies are, let's say in the next 20, 30, 40 years. And then you can discount that based on, inflation, expected inflation back to the present value. Then the sum of that, our future dividend payments, should be the reasonable price of the stock. Of course, we all know that it's difficult to actually make that prediction of future dividends, future earning, or future inflation. But we do have to make some decision. So usually it's a forecast of all those things that forms people's expectation. But of course, there are also other kinds of expectation, like most people probably in the stock market. They only care about the stock prices next 1 week or 1 month or 3 months performance. And they basically base their decisions and their demand side of things based on those very short-term predictions. So while there are different ways to make predictions, essentially it's, again, the expected value of something that determines the supply of a product or service. Okay, so how does that apply back to Bitcoin? Now, for Bitcoin, of course, this goes back to its expected value. Now, from our view, Bitcoin it does have properties like gold. And why is that? Because we all know what gold is something that can store value. We can exchange with gold. And also the supply is limited, uncontrolled or uninfluenced by companies or governments. And that gives a sort of an objective measure in terms of gold's perceived value, in that at least its supply cannot be manipulated. So Bitcoin in many ways is like gold. Its total supply is 21 million, which is the maximum, and no governments, no companies can really manipulate that. So all it really is its price point will be determined by the actual demand. Now, if Bitcoin can be, but in many cases it's a better gold, because Bitcoin, for gold, it's very expensive to store, to transfer, to verify. But for Bitcoin, all of that is quite cheap, very cheap to store, to transfer, and to verify its authenticity. So simply, if we use a simple calculation, there's now about $7.5 trillion worth of US dollar worth of gold in the market. Even just 10% of that is being replaced by Bitcoin. Then each Bitcoin will be worth at least 34,000 US dollar. Okay, that's a simple calculation based on the figures. So Bitcoin's current price is about 10,000 US dollars. So we know that there's still room for growth. Now, of course, whether that price will continue to go up, that is something we don't know. And if it's like gold, probably it will stabilize like gold. But there's another aspect to Bitcoin, which is it still acts as a sort of a currency, in the sense that there are currently over 2,500 cryptocurrencies out there in the market, but only, you may not be able, and there's like 20,000, close to 20,000 exchanges around the world. You may not be able to buy them, buy all those 2,500 cryptos with US dollar or with like euros or renminbi. However, you can definitely buy them with Bitcoin or Ethereum. So what that means is that Bitcoin already is kind of like the US dollar in the crypto space. It's the de facto currency in the cryptocurrency world. So from that perspective, its value could potentially increase as the whole cryptocurrency blockchain market continue to grow. Let's say, for example, if the number of cryptos grow from 2,500 to 25,000, right? And which is not unlikely, because given the affordability, the ease of building your own tokens, and we can imagine all kind of use cases, all kind of companies will be, or even countries will be releasing their own cryptos in the future. So the potential value, this is utility value of Bitcoin, will likely rise, in the long term. Now, so that actually would provide the fundamental, or what Warren Buffett will call the intrinsic value for Bitcoin. Now, so if we base on those expected, future value of Bitcoin, we do expect its price will grow, but whether it will continue to grow, that's really a question of how big the cryptocurrency market will become. Now, so is Bitcoin gold, or is it currency, or is it like stock market shares, stock shares? Now, from our view, we think that Bitcoin is probably more like gold and also somewhat currency, but it's definitely not stock, company shares, because it doesn't generate dividends. It doesn't, facilitate the production of other goods or services. So it's more like gold and currency, but not stock shares. All right, that probably should should give you some perspectives on what's the intrinsic value of Bitcoin and whether it's worth investments in the long term. If you like our content, please go to our YouTube to subscribe us or to like us in our Facebook, fan page. If you'd like to learn more about JCF, please go to our official website at jcf.world. So we'll see you next week. Thank you very much.